All right, traders, we are back again. Let's get into it. All right, traders, in this video, I'm going to try to do everything in less than 5 minutes. Let's see if we can do that. So the first thing is, recently traditional arbitrage opportunities have opened up a lot more because of the crazy volatility due to the virus. Now, I was actually personally able to take advantage of this volatility by using a strategy of arbitrage. Now, what that does is I use BTC USDC, and that's also traded on Coinbase Pro and Binance. There was such a difference between the prices that you could easily just sell BTC USDC on Coinbase and then buy it back for a cheaper price on Binance, or vice versa. Let me show you. In blue, what you're going to see is Binance BTC USDC, and in candlesticks is Coinbase. So what would you do in this situation here? Well, we know that right here on Binance, BTC USDC is trading at 39.29, whereas on Coinbase, it's trading at 41.39. Massive difference. What do? You can just sell it here. You could sell it on Coinbase and then buy it back for a cheaper price down at 39.29 for just a profit immediately. I was able to do that. I don't think that those opportunities are still up there, but you can see that the deviation between the two did get quite extreme at times, which would allow for great opportunities for that, as you can see around here. So that is one thing that you can do, where basically you just look to see if one exchange has a higher or lower price than another exchange, and if you have coins or an account on both exchanges, then you can take advantage of crazy volatility by buying and selling versus undervalued, overvalued. Just do be careful if the volatility is so much that, let's say there's a 2% difference between one exchange and the other. By the time you send that Bitcoin over, what can happen is that the price could have changed so much that you could be unprofitable. That's just a risk you take with traditional arbitrage, but I found it to be quite good. Second one, anti-liquidation. This is one that I recently found out about, and it's really cool. The BitMEX liquidation system is based on the fair price marking. Now, what this means is that it uses the index price. Yeah, right here. The fair price. So what it does is when you're liquidated, you're not going to be liquidated based on the last traded price. You're going to be liquidated based on the fair price marking. Now, what that is the underlying index rate plus a decaying funding basis rate. Let's just focus on the underlying index rate. Now, what we see here is index is purple and candlesticks is just the last traded price. Now, when we go back to the 12th of March and also the 13th around here, there's a massive difference. Now, we've talked about this before with arbitrage, but the cool thing you can do here is because liquidations are based off of this and not based off of this, and these are so different, had you chosen to, let's say, short here with 100 times leverage, what could end up happening is usually your liquidation will be 0.5% up, right? Which would be like right there. But in reality, it'd actually be 0.5% above that because they're using the index rate here. So you could use 100x leverage and end up having like a 7% change to liquidation with 100 times leverage. And this is due to the difference between the traded price and the price here. So had you shorted, let's say here, your liquidation price would be set based on this and the decaying funding rate, but let's just say based on this, which is at 5,700. This is at 5,100. Had you shorted, your liquidation price would be around here, and it typically would be around here with 100x leverage. So you would get a change to liquidation at that point of like 14%, and you'd have 100 times leverage. This is a really cool trick you can do whenever the BXBT on BitMEX varies wildly from the last traded price. Do some more research on this before you get into it, and just make sure that your liquidation is the correct one. I don't really ever like to advocate for 100 times leverage, but if you can use 100 or 50 times leverage and have a great liquidation price because of the difference between the BXBT and the last traded price because of crazy volatility, then it can be a great thing to take advantage of. Finally, the next topic is one that I'm very cautious talking about. People in my Discord will know why. I do not want to give a lot of information on this. There's a strategy that I've actually done mentoring with. I'm not going to name any names, but I've done mentoring with multiple traders. Okay, this is going to be over 5 minutes. Okay, it's going to be like a 6-minute video. I've done mentoring with multiple traders, and what we have been doing is setting up ways to collect passive income from funding without risk of leverage, without risk of liquidation, and with full use of leverage, because there are ways that you can actually fully leverage a long and short to collect funding in a certain way where you can't be liquidated. And if you want to learn any more about that, don't comment it in the YouTube comments. You can PM me on Discord or PM me from email, and I can set that up for you as well if you would like. So to recap what we talked about today, what are the 3 ways that are things you can't normally do really when the markets are normal, but you can absolutely do when the markets are abnormal? Traditional arbitrage, look for spreads between different exchanges that are insane. Anti-liquidation, you will have great liquidation prices when the index rate is different than last traded price. Take advantage of that if you can. Finally, the one I don't want to talk a lot about, but delta neutral funding, where you can collect consistent funding over time without any risk. If you have any questions in that, shoot me an email, check by our Discord, or you can look at any of the products that I sell below. With that, happy trading.